Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is January 26, 2024, Friday. Happy Republic Day to everyone. It's a proud moment for every Indian. With that, let's go into today's discussion. Yesterday we didn't put our video because today is a holiday. We thought we'll put, and also we'll discuss about how the week performance was in general, which is why we are putting one video today as against that of yesterday. So first, what we will cover in this video is the performance in general of BankNifty, Nifty and FinNifty for this week. That is the week of January 22nd Monday till January 26th Friday. Of course, today is a holiday. That is in that case then till yesterday, like how we do for global markets. So global markets probably tomorrow or Sunday we will put the video. So first the levels, FinNifty closed 20,099.40, 0.53% down for yesterday, that is Thursday. BankNifty 44,866.15, 0.48% down yesterday, while Nifty was down yesterday 0.47%, 21,352.60. So overall in this week, how it has performed. So FinNifty fell 2.1% down, while BankNifty fell 2.59% down. Nifty fell just 1.07 or 1.02%, roughly around 1% you can say in this week. So yesterday what happened, first FinNifty and BankNifty, they are moving in identical, and in fact when we are reading one chart, then there is no need to read the other chart, whereas Nifty is also moving similar, but the levels are at a slightly different level. So first we will cover yesterday what it happened, then we will cover for the week. So yesterday FinNifty and BankNifty both opened slightly around the same level as that of day first day. Wednesday, if you recollect, I said that it formed the reversal candle, solid green candle. It is a more of a piercing pattern type, and I had said that it is the second reversal from the Bollinger lower band. In fact, last week in January 15 to 17, that week itself it formed one of the first solid reversal. Thereafter it once again went near the exponential moving average and 50-day moving average. From there, a strong rejection pushed it back once again to the Bollinger lower band on Tuesday, and Wednesday it formed a reversal candle. That is what we had said. Yesterday it opened around the same level, and from there it formed a slightly long lower leg. That means what happened? Bears were in control for most part of the day, and in fact they were at one stage well below the Bollinger lower band and also went below the 200-day simple moving average and exponential moving average, that was day for yesterday. So bears were in control. But what happened towards the end, Bank Nifty recovered around 400 points. So Fin Nifty also recovered nearly 100 points or so. So of course Nifty also recovered some 60-70 points. So due to which what happened, Fin Nifty and Bank Nifty formed a spinning top type candle with a slightly long lower leg, with the lower band, Bollinger lower band in the daily chart being protected. So that's an important thing one has to note. Why it is important? Because as I said, second reversal happened on Thursday, and third time bears are making an attempt to break below the lower band. They were not successful. Is it going to go a runaway rally? No. But the selling is going to be arrested. Of course, one more thing we have to note is, in fact, I am here giving a technical knowledge. Okay, one more thing one has to note is, the bands are still not showing any exhaustion. So which means the lower band is going down like this. So when it shows exhaustion, what it means? The bands will bend and start moving parallelly. All the three bands will move parallelly, or the lower band will start going trending upwards, by which time the upper band will start trending down. That is when we can say that the bands are showing exhaustion. The moment already in the 3-hour, 4-hour charts, it is showing exhaustion. Okay, in all the indices, Fin Nifty, Bank Nifty and Nifty. Okay, so that is an interesting aspect to note. And on the weekly chart, Fin Nifty and Bank Nifty formed a solid red candle, third red candle in succession. Of course, it is below all the key levels, but the 50-week simple moving average and 50-week exponential moving average is holding. So that is going to act as a tremendous support. If that is broken out, then it's something one can expect a very big downfall. But that's not going to happen unless otherwise. Again, I always say, market does not move on the basis of fundamentals, but moves on the basis of perception. Perception is nothing but the mood of market, which is nothing but demand and supply. That is accurately captured by technical analysis. If there is no further unknown events or no new negative news happens, from here on, the bears have to be extremely careful. Shorting is not going to yield result. In fact, they will be trapped. That is what is going to happen. But is it going to happen that come Monday morning is going to fire up and fire up? No, but slowly but surely the trend is reversing. That is something which we want to say. Which is why in the weekly chart, after three solid red candles, it is the we have said that falling three methods, rising three methods. Three falls have happened, then the rising three methods. That means next week we will expect a good solid short covering rally, which will take up near the key exponential moving averages in the weekly chart as far as Fin Nifty and Bank Nifty is concerned. However, during this up move, the 50-day moving average and 50-day simple exponential moving average is something which will act as a resistance, and above which is the Bollinger middle band. That will act as a very solid resistance for both Fin Nifty and Bank Nifty. Now let's go to the Nifty. So Nifty, what happens? Nifty, and again it is the same candle, excepting that Nifty on the daily chart, it has more or less formed similar as that of Bank Nifty and Fin Nifty. But in the weekly chart, well, of course, in the daily chart, Nifty has never broken below the 50-day moving average, simple and exponential moving average. It maintained that. Of course, day for yesterday, it went below that but recovered. So yesterday also it formed a low, but again it recovered. Yesterday's low was higher than previous day's low. So that means no, Nifty is relatively strong. And also here again in the daily chart, the lower band is well protected. That means that is going to act as a strong support in the coming days. Of course, we need to see exhaustion happening. How the exhaustion will happen? When the price does not go below these levels, then the Bollinger middle band is something 20-day moving average. The upper band is plus 2 sigma, the lower band is minus 2 sigma. That means the lower band will show exhaustion, which means it is now falling like this. It will slowly taper and start moving up, and at some stage where all the three bands will come in parallel. That might happen sometime in February middle or so. So that is anyway, that is a long-term story. I mean, 15 days is a long-term story. As far as Nifty in the weekly chart is concerned, it only formed two red candles. Second red candle it formed this week. And of course, it protected the key exponential moving averages in the weekly chart. Which means next week we expect even if there is some fall, the key exponential moving averages will hold and Nifty will bounce from here. So hence Nifty is ultimately what? Rolling up of Bank Nifty, Fin Nifty and non-Nifty of Bank Nifty components. That means the IT, Reliance and all those things. Obviously, the banks are going to gain some strength. That is what is Nifty. With this, let's see, HDFC Bank has formed a solid red candle and it has it touched a low of 1380. It has broken last year's low. That means we don't expect significant up move in this year. But however, the selling next week will have a good short covering rally in the bankings, particularly HDFC Bank and Kotak Bank. We'll see good short covering rally next week. So hence, like a prudent trader will not go short at these levels. That is what I can say. Okay. As far as the support and resistance level for next week, it is very easy this time. Okay, all technical levels has to play. As far as Fin Nifty is concerned, of course, this week banks fell significantly and supported by IT stocks which had supported the Nifty. Otherwise, Nifty would have fallen so much. That's why you see Bank Nifty had fallen 2%, whereas Nifty had fallen only 1%. IT stocks supported it. There was some good support from metals and consumer goods. That is why Nifty was holding. Rather, the fall was only just 1%. With that background, let's go into what we can expect for the option expiry for next week. Fin Nifty, Bank Nifty and Nifty. See, one more thing one has to note, it is going to be a monthly closure. So then that means, no, it's very important that bulls will protect the key levels. In the exponential moving averages in the monthly, as of now, it is just touching there. So they will not allow it to go below that. That means it's very clear. I mean, the answer is very clear. Okay. See, the Fin Nifty, the support is going to be at the all the support for all the three indices will be the last week's low. That is, when I say last week's low, that is this week, 22nd January till 26th, that is till yesterday, low whatever it has formed. That will act as a fantastic support. It will not be broken. For Fin Nifty, that level is 19,878.55. For Bank Nifty, it is 44,429. For Nifty, it is 21,137.20. That is something which will act as a fantastic support. Now the question is resistance. What is the resistance? As far as Fin Nifty is concerned, of course, Bank Nifty also same. The Bollinger middle band will act as a resistance. So it might go there. It will close somewhere around this. Hence, no one has to consider Bollinger middle band and slightly above that as something which will act as a resistance. Of course, the middle band cannot be that easily crossed. It will go there because first is the 50-day simple moving average, exponential moving average is there, above which is the Bollinger middle band. Hence, that will act as a support, resistance, sorry. So now it is at 21,000 for Fin Nifty. Of course, as I have told many times, it's a dynamic level. So the level is more important than the exact price because the price moves. If the stock price moves next week, this level also will slightly go up or it can go down because last week it has come down. So it's the Bollinger middle band is 20-day simple moving average. Okay. And as far as Bank Nifty is concerned, the Bollinger middle band is at 47,016. Again, it's a dynamic level. So don't expect that, no, this level was, we are not giving here to give any levels or anything. We are not SEBI registered. So all we are saying is that these levels are key support levels and resistance levels. So this Bollinger middle band is resistance. As far as Nifty is concerned, the high of January 17th, which is at 21,851.50, it cannot be taken out that easily. Why? Because January 16th, it formed a red candle. Before that, January 15th, it formed a green candle. It was touching around the Bollinger upper band. From there, it opened the gap down on January 17th. And when it opened the gap down, it made an attempt to go up. That high it formed was on that 17th January, which is at 21,851.50. That will act as a powerful resistance. As for the support, I told that it is the last week low will act as support for all the three indices. Tomorrow Sunday we'll be putting global market videos. Thank you very much.